For years, the media has demonized offshore companies as a bastion for drug dealers, illegal gun runners, and money launderers. And on occasion, it has been true that less than reputable people have used offshore companies to hide illicit activities. But the same can be said about US-based entities and those in other jurisdictions around the developed world. But in both instances, there are also far more legitimate businesses being operated through entities both in the developed world and offshore. But with declining tax revenue, the developed world has used their power to limit banking options, require more stringent reporting and substance requirements, and generally done everything they can to make it harder to legally use entities that help you reduce or eliminate corporate taxes. Today on Vagabond Creators, we're going to explore the offshore world and what has come to be known as the midshore world to help you determine when it makes sense to form offshore or midshore structures to optimize your taxes and your business operations. Hi, I'm Aimanda Reverie, the Chief Content Avatar for Vagabond Creators. We help location-independent creators earning more than 6 figures a year, living the vagabond lifestyle, minimize your taxes, and maximize your lifestyle by providing comprehensive, custom-tailored tax optimization strategies and implementation services. Are you a software developer working remotely? Or perhaps a global artist, musician, or author navigating the complexities of earning internationally? If you're a high-net-worth, location-independent creator, you've likely felt the sting of complex international tax laws, residency uncertainty, or the constant worry about asset protection. For too long, the idea of offshore companies has been shrouded in mystery, often associated with secrecy or pure tax evasion. But for savvy, globally minded entrepreneurs like you, understanding when and how to leverage offshore or midshore entities isn't about avoiding your responsibilities. It's about strategic financial optimization and achieving unparalleled global freedom and security. The problem is real. Operating your creative business across borders without the right structure can lead to a tangled mess of double taxation, legal ambiguity, and a constant fear of asset vulnerability. Imagine losing a significant chunk of your hard-earned income to taxes you could have legally minimized, or having your valuable intellectual property exposed to unnecessary risks. This ambiguity can lead to constant stress, limiting your global freedom and peace of mind.
Ah, yes, the labyrinthine world of international business entities. My name is Bill Abogado, Deputy Chief Content Avatar for Vagabond Creators, once again standing in for our founder, who prefers to remain anonymous after their brief but intense stint as what their cousin called a neighborhood pop star. It's a whole thing. Despite the name, I am not a lawyer, although I do play one on VOD. Why am I a 3D animation, you might ask? Well, to remind you that this is not legal or tax advice, because while our founder is a New York licensed attorney, Vagabond Creators is a consultancy that helps our clients manage the myriad of attorneys, accountants, and banking consultants needed to implement an optimized tax and lifestyle plan. And this video is purely for educational purposes. But I am also here to simplify some of the more complex technical aspects of this entire process. For the modern digital nomad, the paper company model, a shell entity with no real activity, is effectively dead. Modern global tax regulations, especially economic substance rules, demand genuine local presence and demonstrable economic activity. Fail to comply, and you're looking at substantial penalties, not to mention reputational damage and a lot of headaches. This is why simply chasing the lowest tax rate is a fool's errand. You must balance potential tax efficiencies against the very real costs of establishing and maintaining substantive operations, which could include physical offices, local staff, and professional resident directors.
Exactly, Bill. It's about finding the right balance between flexibility, freedom, and security. So, when does forming an offshore or midshore company actually make sense for high net worth creators? If your creative works, your music, your films, your literary content, your software are your most valuable assets, separating them into a dedicated IP holding company is a proactive risk management imperative. This shields your intellectual property from the operational risks, lawsuits, or financial distress of your main business. If your IP is owned by a company that merely licenses your IP to your operating company, so long as it is the right type of entity, i.e., one with robust charging order protections, for example. A charging order is an order to pay the debts of an owner of a company from the profits of the company. Then your IP is protected from nearly any creditor risk. The right kind of charging order protection means that if you, as the owner of a company, get into a serious car accident and are responsible for millions of dollars in damages to someone as a result of that accident, they won't be able to take your business and its assets to settle the judgment. They will only be able to receive payments, which may never come from the company. This protection can become an even stronger asset protection shield when it is coupled with the company being owned by an asset protection trust in the right jurisdiction. Royalty income is generally taxed as ordinary income, but a strategically chosen IP holding company in a jurisdiction with a favorable IP box regime can offer significantly reduced corporate tax rates. Imagine an effective tax rate on qualifying IP income as low as 2.5% in Cyprus, or 5% in the Netherlands for certain copyright royalties. Now, this is just one example, and it is an example that needs to be considered from a totality of circumstances. It makes no sense to have your IP holding company situated in a jurisdiction where it won't benefit from a double tax treaty with the country where the majority of your IP royalties are earned, potentially negating the benefits of the IP box regime.
And this is where it gets nuanced. Many IP box regimes prioritize patents and software copyrights, while the Netherlands, for example, explicitly includes film and general copyright royalties at favorable rates. Others might not. As Aimanda has said, you need to carefully audit your specific creative IP to ensure it qualifies in your chosen jurisdiction. Also, double tax treaties are crucial here, reducing withholding taxes on your incoming royalties. Think of it as a global GPS for your money, ensuring it reaches its destination with minimal diversions. Even when double tax treaties likely apply, you also need to know what limitations of benefits rules might make the choice of jurisdiction useless to you, and other general rules on forum shopping that might prevent you from benefiting from a treaty.
Thirdly, when you're scaling globally and need streamlined operations. For larger international operations, complex multi-entity structures, like holding companies, owning operations companies, or using employers of record, become incredibly beneficial. An employer of record, or EOR, can handle payroll, taxes, and compliance for your global remote team, freeing you from administrative headaches and local labor law complexities. In some instances, an EOR might also keep you from having a permanent establishment in a given country, where such an establishment might be less than beneficial. But again, that may not always be the case. This is why local tax attorneys and accountants in each relevant jurisdiction need to be consulted before a plan is fully implemented. This is about achieving unparalleled flexibility, freedom, and security in your global living. It's about designing a tax-optimized lifestyle where you keep more of what you earn to reinvest in your passion and freedom. But here's the crucial caveat. These complex structures don't make sense for everyone. If you're a small business with minimal assets or very limited royalty income, the administrative burden and costs might outweigh the benefits. And remember Bill's point. Economic substance is paramount. If you can't demonstrate genuine activity in a jurisdiction, you risk penalties and the loss of your intended tax advantages. knowing when, where, and how to deploy structures, and which jurisdictions will work in a given scenario, and which jurisdictions or entities will not work, is 2 parts art, 3 parts science, and a lot of legal and accounting homework. And then there's banking, often overlooked, but it's the new bottleneck. While traditional offshore havens like Vanuatu can present significant challenges due to limited digital services and financial instability, midshore jurisdictions are proving more viable. Think Hong Kong, Singapore, Malta, Gibraltar, and Cyprus. These places generally offer more established and accessible banking ecosystems, often with fully online account opening options. For the right person, a U.S. LLC may make sense as part of a structure which may be tax-free. Yes, for non-resident aliens of the United States, a U.S.-based LLC can be the ultimate tax haven in the right scenario. The same could hold true for a UK LLP in some situations. There are times when more traditional offshore companies in the BVI, the Cayman Islands, Nevis, or Panama might be appropriate. But it is always an issue that needs to be dealt with from the facts of the individual business owner.
Indeed, many traditional offshore jurisdictions have faced de-risking by larger banks due to stringent anti-money laundering protocols. But that doesn't mean in some scenarios they do not make sense. It just means the business needs to have the right risk profile, as does the business owner, along with the right deposit amounts for the right bank. The wrong choice can lead to difficulties in opening and maintaining accounts, and severely limit international payment services, but that is why you need a plan, and why expert advice is crucial to success. Even with recent revivals in some, due diligence is key. Don't be caught by a bank that makes your daily operations a nightmare. It's more stressful than a pop concert with a wardrobe malfunction. But what is not malfunctioning is the like button, which you should tick now, before tapping the subscribe button and ringing the notification bell, so that you will know the next time Vagabond Creators posts a new video.
So, if you're a location-independent creator earning more than 6 figures and you're ready to move beyond basic tax strategies to truly optimize your global lifestyle, here's your next step. We offer comprehensive tax and lifestyle optimization planning and implementation services, international business entity structuring, and assistance with appropriate residence permits, and even help obtaining second citizenships. We empower you to achieve unparalleled flexibility, freedom, and security. If you're ready to transform your complex international tax situation into a pathway to true global freedom, click the link below to book your 1-hour initial consultation for just $550 at vagabondcreators.com/qualify. And for viewers of this specific video, we have a special offer. Use the promo code Offshore at checkout to receive $50 off your initial consultation. That's right, Offshore for $50 off your consultation. Now, unlike some companies, we don't accept just anyone as a client. We have a comprehensive pre-booking questionnaire we have all of our clients fill out, which helps us determine whether or not we believe our services will be helpful to you. If we think we can help you, then we will let you pay us for an initial consultation, but only after we have practiced what we preach. We ask you these questions to make sure we know all of the boxes we need to tick to make sure we are compliant with and aware of any tax obligations we may be subject to as a result of taking you on as a client. If you're not ready to become a client, you can still sign up for our newsletter at newsletter.vagabondcreators.com for ongoing insights and resources to help you understand more about how to minimize your taxes and maximize your lifestyle. Don't let tax complexity limit your global aspirations. Design your tax-optimized lifestyle today. And if you want to learn more about the questions international tax attorneys ask to not only optimize your taxes, but avoid the hidden tax pitfalls of your global lifestyle that no one warns you about, you should click the video on screen now. We'll see you there.